Today I'm going to talk about Nike, one of the most profitable sportswear brands in the world. Right? While Nike has been always a popular stock, there are already new footwear companies that are taking away market share right under its nose. Let's find out more in today's video. Okay, so first thing first, we all know that Nike stuff are priced at a premium due to the branding of their huge logo. Just do it. Alright, however, if you look at this article, it seems that people are warming up to other brands as well, like skechers and all that. The main reason that the article gave is everyone is trying to save money in this difficult and high inflationary climate. In fact, I also observed that Skechers brand focusing on comfort has resonated well with many middle to old age folks. I personally also own a pair of slippers from Skechers and intend to buy more for my family going forward. Okay, that being said, there are many other footwear brands in the market and their share prices have done much better than Nike. Given how the global footwear market size around 373 billion in 2021 and expected to grow 4.3% from 2022 to 2030, there is much more room for growth for all the industry players. So now let me show you what these footwear brands are and also do a quick comparison over in Seeking Alpha. But before that, if you have been enjoying the video thus far, I hope you can help me to smash the like button and subscribe to our channel for more insightful stock analysis videos like this. And to show my appreciation, here's a financial meme for you. Now I'm over at the Seeking Alpha website and I've already done some preparatory work beforehand. I've saved this as a footwear brand comparison. Over here you can see there's Nike, there's Deckers Outdoor, there's On Holdings, Skechers, Crocs, and even Adidas. So Adidas is a Europe brand, but they do have a OTC listed in US. Alright. So over here you can really see their different statistics like their market cap, how many employees they have, how many analysts is covering each particular stock, right? And if you were to scroll down, okay, you can see the share price performance here. Okay, over a 1 year period, Nike is only giving investors a 3.9% return. Compare that to DEC, okay, On Holdings, Skechers, Crocs, and Adidas. Nike is actually giving the lowest share price return in the 1 year period, right? And what about if let's say you lengthen it to 10 years, okay? If you lengthen it to 10 years, you can see that, okay, give it a while to load. Okay, you can see that Nike 10 years period they are giving a 229%, not so bad until you compare it to the other footwear brands like even Skechers and Crocs are beating or doubling or more than tripling the share price returns that of Nike. All right, so with that in mind, right, let us look at other metrics as well. We don't just look at share price return, right? So now let us look at the the valuation. Okay, if you look at the valuation, you can see that most of them are profitable. Okay, and if you were to compare the P ratio, right, at the forward P ratio, Nike is trading at 29 times. Okay, Skechers is only 16 times, and Crocs is only a 10 times forward PE. Okay, and Deckers and On Holdings are much smaller companies. They are mainly in the US, but expanding internationally pretty fast at a rapid pace. So if you want, you can check them out. All right, and on top of that, let's look at the growth rates. Okay, if you were to look at the revenue growth, okay, year on year basis, Nike is doing not so bad, 9.6%. But if you were to compare it to the competitors, they are giving a 15%, 71%, 14%, 50%, right? So these smaller footwear brands are actually, growing much faster at a faster clip than Nike. So if you are interested in this footwear industry, you can actually look out for these smaller competitors. All right, and okay, but if you were to talk about profitability, that's where Nike is showing their premium branding comes into effect. You look at the return on equity, you look at the net income margin is much higher, maybe to the peer average. All right, especially sketches, especially on holdings. Okay, and return on equity, I think Crocs is slightly too high to be believable, so we need to do more research on that particular rating. Okay, so okay, you can actually check out more, the more statistics over here. If you're interested in, in this report itself, you can just let me know in the comments, and I will, download it as a PDF and then share it with you in the YouTube comments. All right, just leave a comment below saying, can you give me the footwear comparison PDF? Yeah, to wrap up, the footwear industry is a competitive one, and there will always be up and coming brands like On Holdings or Skechers targeting different niches in the market. Of course, this does not mean that Nike is a bad investment. It is a global leader with a loyal customer base, strong distribution network, and diversified product portfolio. But as an investor, we should always be mindful of the changing consumer preferences and the potential threats from incoming uh, competitors in the same industry. So what shoe brand is your favorite? Let us know in the comments down below as well. With that, if you find this video helpful for you, I will appreciate it if you can help me to tap the like button and subscribe to my YouTube channel for more of such stock analysis videos. Thanks for watching, and I will see you next time.